What is up, guys? I'm back here again with another one. Today, I'll be discussing liquidation. Okay, so it's common logic that you can't buy something if no one is selling it. Neither can you sell something if no one is willing to buy it. So with that information, if the market maker wants to sell the market, he will need to induce you to buy. And similarly, if he wants to buy the market, he will need to induce you to sell. Sit back, relax, and enjoy. We want to do top-down analysis until execution, really, to see what we do when we're analyzing so that we can get our points of interest and we can actually make proper informed decisions. Okay. So in front of me, guys, I don't want to keep pressing mute. Please mute your mics. I beg you, please. It's very disruptive. Okay. All right. Anyway, so in front of me, we have the volatility 25 and we're on the weekly time frame. Okay, so as usual, guys, as I always say, everything is supply and demand in the market. In fact, today I'm also going to be just touching up on liquidation as well, because it's also very important. So quickly, what is liquidation? You need to understand that a market, right? The definition of a marketplace, even if you're going to use a dictionary right now, is where buyers and sellers come to transact, right? Basically, for a market to be adequate, we need one buyer and one seller. Let's just look at it from that perspective, right? So with whatever movement that you see on this chart, be it a selling movement, right? Understand that there has to be someone on the opposite side, right? Basically, you can't buy something if no one is selling it. You understand what I'm saying? If we're going to use common logic or just common sense. If no one is selling whatever you want, then it will not be available to you. This is why everything is supply and demand. Okay. So now with that being said, you need to understand that the market makers or the institutions, those that we trade against, right, need to make sure that you're on the opposite side so that they can make money. How can I put it? So if they want to, guys, please mute your mics. All right. So for instance, if the market maker wants to sell the market, he has to make sure that you are in buy positions. You understand? Or if he wants to move the market up, meaning he wants to buy the market, he needs to make sure that you are you're in sell positions. This is why they induce. So now this is what brings us to the concept of liquidation. Do you understand what I'm saying? Basically the inducement so that the market maker can actually make the move that he wants to make. So quickly, before we even go far, what you see right now is volatility 25 on the weekly time frame. I can already spot a liquidation that actually happened. You might not be able to see it, but I'll explain to you quickly why. So now on the weekly time frame, you can clearly see that this is a low over here. Okay. So what happens at lows is that most retail traders or most amateurs see this as a level of support, such that when the market came here, that person will be trying to what? To buy the market, right? Obviously, because it's support. In fact, if you go to the lower time frames, I would not be surprised if you see that we had some bullish candles in that support. It's just to induce you to start buying. Do you understand what I'm saying? So why does the market maker do that, right? He does that so that when that support breaks, it fuels a reaction from most people. Do you understand? A break of support, like we always say, is going to influence people to sell the market. Do you understand what I'm saying? So when support breaks, many people start selling. Now the market maker actually has enough liquidity to actually move the market up. So he can't do anything without you making mistakes, basically. This is now why synthetic indices are somewhat easier to trade than actual Forex. Because now Forex is moved by world events and news, like the really volatile movements are basically fundamentals in the Forex market, which is why it's quite somewhat difficult to trade. But with synthetics, the major movements actually come from liquidation. So if you can actually understand the process of liquidation, you can bag a lot of money because now you know exactly what's going on. So now, quickly, we have this low over here. The low was spiked, and this would obviously influence many people to sell the market. And guess what? The market maker who wants to actually buy, his intention is to buy this whole time, now has enough liquidity. Once again, he can't sell something, sorry, he can't buy something if there's no one selling it to him. Do you understand what I'm saying? So this is why you get this. I hope that's kind of like a clear explanation of what liquidation is. But anyways, let's just scale it down to the lower time frames and see if we can spot it. So now look at this now. This is that level of support on the daily time frame. You see, all of this is support. Make no mistake. Such that, like, I mean, come on, if you've never traded before, or if you don't understand this, what's going to happen? You're going to be waiting. Anyways, so what was I saying? Right, we have a support level over here, right? And what happens when support breaks is that usually we have our retail trader, he sells right here. Most of the retail traders are selling here. And that is good news for the market maker who can now start pumping buy positions. Okay, so I think we actually have a setup on this on volatility 25. My setup was actually along the lines of thinking that what I saw while we were on the daily time frame was this. I drew a horizontal line like this, and I said to myself, this is a clear imbalance, right? Why is this an imbalance? You can see that price jerked up, and it's also like a line of sensitivity, as you can see, such that if we were to get like a tap into here, all right, we can somewhat expect a movement up, all right? So now, why am I also expecting a movement up? On the weekly, this is somewhat like a double bottom. This liquidation has occurred. So yes, we can maybe expect a movement up maybe towards here. Okay, but you still need to be skeptical. You need to also criticize your own analysis sometimes, because now, if you're to see what has happened here, we had this impulsive move, right? Look at it this way. And we had the corrective move. And that corrective move went to level 50 on the Fibonacci, right? So you might find that actually what wants to happen is, if you guys know about fib extensions, we might have just a little more, all right, on the downside, but that's not what we're dealing with right now. We're going to deal with the momentum, what the market is showing us, okay? Keeping risk tight and so forth. So once again, we have that daily imbalance here that we're saying if prices to come in here and we get some nice confirmations, we should be on our way up. On the H4 time frame, this is what stuff looks like. Okay, now, so this is what brings me to the setup that I sent. Okay, so now on the H4, we have the, sorry, I just moved that imbalance, but this is the imbalance in any case. Price was failing to break this level, and then it finally broke, right? Now, guess what? This is a key level that price broke out of. Now, using liquidations again, once again, just the concept of liquidations, right? There's this low right here, okay? There's this low, right? So what do you think is going to happen when price breaks the low? To the amateurs, okay, fine, where are the amateurs in any case? Let's go fetch them. They are maybe on the M30, all right? And this is a clear level of support, like that. So for instance, let's say the market gives you a nice scenario here, and then boom, we break support. It's going to fuel people on the wrong side of the market. And now that is exactly what the market maker kind of needs, right? For you to be on the wrong side, really, for you to be on the wrong side. And we liquidate that low, we come into this demand zone, and then we can finally have, as the market maker, I finally have enough liquidity to push the market up. You know, now this is where also, you know, this pathetic concepts of trading would be lying to other people now. So remember now, someone else also says this is a break of a trend line, and if we retest trend line, you know, we're going up. This is why sometimes it works, but I mean, it's not really what's actually going on, to be honest with you. You can use it if you like, but I think it's better for you to use something that's actually the truth, okay? Not just like weird things. So what are we saying? We want a retracement into here because we're kind of buy biased. Why are we buy biased? Because on the weekly, we said we have hit these lows and we have liquidated. So we need to find a way, an area in which we can start buying the market. We don't just buy, we buy at discounts. So we need to find within this price action, where's a nice discount that we can take advantage of so that it makes sense. You always buy low and you sell high. Since we're buy buyers, we're looking for buys. I'm comfortable with saying after we've liquidated this low, I start looking for buy positions. So now, once again, also what's going on right here could be a liquidity scenario forming as well. You need to understand over here, right? For an amateur, this is a resistance area, right? And guess what? He's in sell positions right now because he saw resistance and well done. I mean, like he's actually in profits, but what is likely to also happen with what's happening here is price can just dip into here. All right, see that? And then it liquidates these highs, all right? Because now your stop losses will be way over here, right? Takes out those stop losses. We get into this selling order block, which is also a very nice one because it was a nice engulfing one. And you can already see that this is an area where price broke out of within that engulfing. And then we can maybe get that drop that we're looking for. This is why you can't rush. This is why I've always told you, right? If you can see a clear level of supply, you want to sell there. If you can see a clear level where you know that there's demand, you want to buy there. If you're in the middle like this is where we don't trade. I haven't even traded today. And guess what? I'm fine with that because I haven't seen a setup besides being busy or whatever that I'm actually comfortable with. So what am I saying right now? If we can get a dip into here, I might start looking for sell positions because I would be expecting a retracement into here. And if we can get this, basically these highs would have been spiked, these lows would be spiked if we come into here. I hope that makes sense. Okay. So that's our analysis on the volatility 25. Okay. Now let's go to volatility 75, 1S. I'm going to start maybe on the weekly time frame. Okay, so on the weekly time frame, I mean, there's not much there except that this would be your buying, like the level of demand on the weekly, okay, which is so far away. It's 3 weeks. It's from 3 weeks back. We can't do much with that. So now let's go to the daily time frame and see what's going on. So on the daily time frame, let's remove this. We've been forming higher highs and higher lows. There's no escaping that. If we want, we can maybe just connect the most recent lows, because in our trading is a game of prediction, right? We're just trying to see where we can find a move. With this type of market structure, you really want to be finding buy positions. It's stressful for you to try catch sells here because you just, like, the market will do whatever it wants with you. Even if you see a sell signal here, the momentum is too high. Look at what the weekly candle is like and all that stuff. Even though you're at highs here, you really want to catch buys until that momentum fizzles out and you know for sure that we're actually retracing to the downside, okay? So while we're still on the daily, right, I see that price is actually traveling maybe in this channel like this. Okay, so this is how I actually analyzed before I send these setups to you guys. They actually come from the higher time frames, in case you guys didn't know. So we had this high over here. That price broke, right? Boom, we broke that high. And we don't participate there. It's too high of a price. The only time we'd want to participate is if price comes back into these lows here. You understand what I'm saying? And at that low, there's actually an imbalance as well, right? It's an imbalance. You can see by that candle close, we pushed up such that if we can come and get a tap into here, it would be something nice. It would be a good enough discount. Why is it a good enough discount? Well, for the price action in front of us, firstly, we're touching the bottom of the channel. We're also at these lows and so forth. The story doesn't end there. Let's go to the H4 time frame and check out what is actually there. Right. Now, what is actually there on the H4 time frame is a gang of lows. All right. This low over here, all right, is likely to get liquidated. That's what it means. You see now, all right, because we picked up that red imbalance, line of imbalance, where we're saying we want to start looking. And also, what's nice there is this buying order block there. So, okay, fine. Actually, let's do it this way. We've been trading engulfing candles, right? There's this bullish engulfing candle. This whole zone is our zone of possibilities. And our job is to go inside this engulfing candle and look for areas in which price broke out of, right? I guess. Let's see if there's something. Okay, nothing really clear. Let's do this, M15. Okay, nothing really clear. Okay, but anyway, so we're on the H4 time frame. And we would want price to come back into somewhere around here, into this imbalance. It's a good enough discount. And guess what? These lows would have been liquidated, which is nice. These lows show that there was significant interest here at this price level. Let's just zoom in and actually check out what happened. So for 4, 8, 12, 16, 20 hours, the market was here. And then some guy, some billionaire said, boom, I want to invest in volatility 75 1S. Let me pump some money. So what does that mean? At level 10526, there was significant interest, right? So if prices to come and dip below 105.726, firstly, we'll be liquidating these lows. And if the market maker wants to push the market up, if we make the mistake that he wants us to make, which is start selling because of whatever scenario they give us, you have enough liquidity to go against us strongly. That's one. Two, supply and demand principles. If we have a price here, a lower price will always attract people into the market. Because if we're saying that at 105.26, people, someone was interested at volatility 75 1S, don't you think at 104, this person and also the person who couldn't even afford is also going to be interested? So what does that do to demand? It increases it. Okay, so this is just for the H4 time frame. If you want to catch any buy moves, because we are buy bias, like we said, you want to wait for it to come to the discount price. Are you selling right now? No, because you're in an uptrend. If you sell, Lord knows what they'll do with you. You understand? You want to wait where you can actually figure out where the demand is. Okay. If we are to also, yes, now for the longer perspective, right? For the longer perspective, of course, we would want, let's say if price does come back in here and then it does go up and so forth, the buying momentum is going to fizzle out sometime. But an area of interest that I would also like is something like here, because you can clearly see that these are very evident lows. And if we can spike below this, there's no ways the market maker would not want to do a nice number and nicely come up here and then maybe form a head and shoulder and then drop. So this is also a very nice area to look out for if in the long run, that is, if prices to come in here. Okay, so but for now, there's buyers in here. There's an imbalance in here. We have a channel touch. Let's focus on what's there. If price does come there, keeping our risk tight, let's look for buy positions. Okay. All right. That is volatility 751. Right. So there you have it. Now you know how we incorporate liquidation within market structure to catch major swings in the market. Feel free to contact me for trading related services, including mentorship. Find the contact details in the description of this video. Until next time, ciao.